The lease is signed, your business is operating, everything is moving along just fine. Then a TMI increase shows up and suddenly you have questions. Why is my occupancy cost higher than I had expected? Why did that TMI increase? Why am I paying for that? Most of the time, the issue isn't necessarily the charge, the issue is understanding the charge. One of the biggest pain points in landlord-tenant relationship isn't the rent, it's the part sitting beside the rent, TMI. My job is helping clients understand the full occupancy cost before they sign that lease. It's a lot easier to create clarity up front than after the fact, and today I'm going to explain what TMI is, what it covers, why it changes, and what you should understand before signing a lease. And finally, how clarity up front helps create a stronger landlord-tenant relationship long after the lease is signed. I'm Susan, that commercial realtor, built for business, backed by data, negotiating with bite. Let's make sure you're seeing the whole picture. So what is TMI? Let's start with the basics then. TMI stands for taxes, maintenance, and insurance. In simple terms, it's the operating cost of running and maintaining the property. Property taxes need to be paid, the building needs to be insured, snow needs to be cleared, and parking lots need to be maintained. Common areas need to be lit, cleaned, and looked after, and those costs exist whether the building is fully occupied or completely vacant. Rather than building those expenses into the rental rate, commercial leases typically separate them. That's why you'll often see a lease rate quoted as $14 net rent plus $7 TMI. The first number is the rent. The second number is your share of operating costs. So in this case, your occupancy cost is really $21 per square foot before utilities and HST. This is where confusion can start to creep in. A tenant may focus on the $14 net. A landlord is assuming everyone understands the total occupancy cost is $21. Neither side is strictly wrong, they're just looking at the same lease through different lenses. That's why understanding TMI from the beginning matters. So are you wondering what exactly you're paying for? This is where the details matter. Every building is different, every lease is different. That's why I never assume TMI means exactly the same thing from one property to the next. One of the most important things to understand is what isn't included in your lease rate, so you have the full occupancy cost picture before you make a decision. Typically, TMI includes things like property taxes, building insurance, snow removal, landscaping, parking lot maintenance, common area costs, security systems, waste removal, and property management. Some leases include additional terms and some don't. That's why one of the first things I review with clients is exactly what expenses are recoverable under the lease. The goal isn't to challenge every line item. The goal is to understand your total occupancy cost before you sign. That's how surprises get avoided and how you end up with a stronger working relationship between the landlord and tenant. The next question is usually, so how do they come up with that number? Generally speaking, TMI is allocated based on the amount of space you occupy within the building. Let's use a simple example. A building contains 20,000 square feet and you're leasing 5,000 square feet of it. You occupy 25% of the building. In most cases, you'll be responsible for approximately 25% of the recoverable operating costs. That's the basic concept. The exact calculation can vary depending on the lease structure and the property itself, which is why it's important to understand how your proportionate share is being calculated. This is another area where clarity matters. If you understand how the number is being calculated, you're far less likely to be surprised by it later. The next question I often get is, can TMI change? Absolutely. In fact, you should expect it to. One of the biggest mistakes I see is assuming the TMI number in a brochure or a proposal is fixed for the entire lease term, and it is not. The operating cost of running a building changes over time, just like the operating cost of running your business changes over time. The TMI figure you're shown today is typically based on the best information available at that time. It's not a guarantee of what those costs will be 3 years from now. We've seen a good example of that over the last few years. Insurance premiums have increased, property taxes increased, labor costs, snow removal costs, Maintenance contracts, they've all increased. Commercial buildings experience many of the same cost pressures businesses experienced. When those costs rise, TMI can rise as well. That's why I encourage clients to focus on understanding how the TMI works, not just what the current number happens to be. I also encourage them to budget for future increases instead of assuming that today's occupancy cost will stay frozen forever. When you understand the mechanics behind TMI, future charges become much easier to understand, and that goes a long way toward avoiding surprises throughout the lease term. So how do you know what you should be paying for? This is where lease review becomes important. A big misconception I see is that tenants assume TMI is the same from building to building, and it isn't. The lease, however, should clearly define what expenses are recoverable and what expenses are excluded, how costs are allocated among tenants, how reconciliations are handled, and what rights you have to review and question charges if something doesn't make sense. When I'm working with a client, those are some of the conversations we have before a lease is signed. Not because we're looking for a fight, because we're looking for clarity. Most disagreements I see are not caused by bad intentions, they're caused by different expectations. The tenant thought one thing and the landlord thought another. Then the lease may have said something entirely different. The best landlord-tenant relationships happen when everyone starts from the same understanding. That's why I spend so much time helping clients understand not only what they're paying, but how those charges are calculated and managed throughout the lease term. Clarity solves a lot of problems before they ever had a chance to become problems. By the time a client signs a lease, I want them to understand more than just the rental rate. I want them to understand their occupancy costs, how TMI is calculated, how it can change, and what questions to ask before they commit. Most landlords are trying to operate a building. Most tenants are trying to operate a business. Neither side benefits from surprises. And this is why I spend so much time reviewing the details, asking questions, and helping clients understand what they're agreeing to before they sign. Because at the end of the day, TMI is just one part of your occupancy cost. If you found this helpful, like, subscribe, and follow along. Every week, I answer commercial real estate questions that are easy to ask before you sign and expensive to ask after. I'm Susan, that commercial realtor, built for business, backed by data, negotiating with bite. Now that you know the difference between rent and occupancy cost, what are you going to do about it?